I want to tell you a real story about somebody who wasn't ready to purchase yet because they had a ton of late payments and their credit score was below 500. He listened to exactly what I told him to do, and in less than a year, he was ready to buy a house using his VA loan. I was just talking to him before filming this video, and he's about to make an offer on a house. If you've been denied for one reason or another, and you just know in your head that you're not going to get approved, watch this entire video. Connect with me. I'm going to show you everything you need to do to get a VA loan. Real quick, before I keep going, if you've been denied by somebody else and they told you your credit score wasn't in a good spot, it's likely a lender overlay, not an actual VA requirement. I help people overcome this every single week. My information is in the comment section. Reach out and let's actually look at your file before you write yourself off. If this video is helping you, subscribe. VA loan education every single week. Let's keep going. Here's something most people don't know. Veterans can qualify for a home faster than almost any other loan program out there. The reason is twofold. First, no down payment required. The average first-time home buyer in 2024 was 37 years old. The main reason most people can't buy before 37 is they haven't saved up the down payment yet. 3.5% to 20% on a $300,000 house is $10,500 to $60,000 just to get in the door. Veterans don't need that. Second, the credit requirements are more relaxed on VA loans. Not every lender uses that flexibility. Some add their own rules on top of what the VA actually requires, and we're going to chat more about that. So I want you to remember what I'm about to tell you. Chapter 4, page 36 of the VA Pamphlet 26-7. If somebody tells you the minimum score to get a VA loan is 580, they're wrong. That's their overlay. If they tell you it's 620, they're wrong too. There is no minimum credit score requirement for a VA loan, period. What the VA actually cares about is your payment history. How many late payments have you had in the last 12 months? If you don't have any late payments in the last 12 months, even if you don't have a credit score at all, or your score is below 600, we can still get this deal done. No problem. VA underwriters are not just looking at your score. The score is one data point. What they want to understand is your story. What caused the damage? Is it isolated to a specific window of time or scattered across years? Is there a documentable cause with a beginning and an end? And what does your financial picture look like now? Not at your lowest point, but today. So what does a strong recovery file look like? It looks like an isolated cluster of late payments, not scattered damage across years, but a concentrated window tied to one specific event. A documented cause, job loss, medical emergency, a real estate transaction gone sideways, something with a start date and an end date, clean history after that event, balances paid down, savings being built, income that supports the payment. And the nice thing with a VA loan is you only need 12 months of that clean payment history. And through all of this, income still matters. The VA's primary income measure is residual income. How much do you have after your housing payment and all your debts are covered? A strong residual income number carries real weight, especially on a file with credit complexity. The other things to know is you just need consistent income. VA disability can get you a loan. W-2 income, salary, hourly pay. Any consistent income that we can show that you are going to be successful in, even if you've only worked there for a day, which I've done with veterans, that can be used to qualify you for a VA loan. So you hear me say this a lot, lender overlay. So what is a lender overlay? A lender overlay is when a lender adds their own requirement on top of what the VA actually requires. Maybe they require a 580 credit score or a 640. Maybe they require collections to be paid off when the VA doesn't. Those extra requirements are that lender's rule, not the VA's. When a lender tells you no, they might just be telling you that their rules don't let you get a VA loan, not that the VA. A different lender, one who works with actual VA guidelines without unnecessarily overlays, may look at the exact same file and approve it. Ask directly, is this a VA guideline or your lender overlay? If they can't cite the VA Pamphlet 26-7, you probably already know your answer. Let me tell you the full story I mentioned at the start of this video. The first time I met this borrower, let's call him Jonathan, his FICO score was below 500. He had a stack of late payments behind him from a rough stretch. Here's what happened. Jonathan and his wife did everything right on paper. They listed their home, their agent promised it would sell in 30 days, it took 6 months. They floated their lives on credit cards the entire time. Then their agent recommended a $12,000 repair to help them move the sale. So that went on credit cards too. By the time it was over, every card was over 90 days late because the minimums alone had grown past $500 a month. That's how his score ended up below 500. Through no real fault of their own, their credit looked destroyed. The next time I met with Jonathan, a year had passed. He had done everything I told him to do. His credit score was still below 620. Let me say that again, still below 620. But here's what changed. He had 12 straight months of clean payment history. Every account paid on time, auto pay on everything. Utilization paid down near zero, $1,500 a month going into his savings. And here's the part I need you to understand. Anybody who has clean payment history for 12 months, no matter what their score is, we can still get approved for a VA loan. His score never even crossed 620. It didn't need to. The 12 months of clean history is what carried the file. Here's where most people fail, and this is the most important tactical thing in this entire video. When underwriting asks for a letter of explanation, most borrowers treat it like an apology. I went through a difficult financial period and I've learned from this experience. That letter fails because it gives the underwriter nothing to work with. No evidence, no timeline, no documentation, just feelings. We need to treat this like a case file. A letter of explanation is a legal brief. You are building a case. You tell the story and attach proof or evidence to every claim. Here's what we built for Jonathan. Full story. Agent promised a 30-day sale. It took 6 months. Repairs went on credit. Minimums exceeded income during the wait. Every account went late with a 5-month window with a clear start and end date. Then the evidence. The agent's email promising a 30-day sale, the original listing contract, every repair invoice, the closing statement showing when the sale finally closed. The letter of explanation held because the evidence held. Underwriters respond to a story with receipts, not an apology with feelings. Whatever caused your damage, start gathering documentation now. Medical records, termination letters, divorce decrees, contracts, emails, bank statements showing the timing. Anything that proves this was an event with a beginning and an end. Build the timeline. When did it start? When did it peak? When did it resolve? What does your file look like after? That is something I can work with. Now let's talk about something that a lot of people don't want to talk about. They just want to get into the house. But I had this real serious conversation with all my borrowers. When Jonathan first came to me, he had $1,000 in reserves. I told him that's taking off with just enough speed to get airborne, but too heavy to clear the power lines. My commission was on the other side of that decision. I still told him to wait. Homeownership has costs that show up after closing. Appliances break, HVAC needs service. If you close with $1,000 and something goes wrong in month 2, you're back on credit cards. This is the last place you want to be coming out of a credit recovery. By the time Jonathan is going to close on his house, he's going to have $10,000 to $12,000 in their bank. They're going to close and actually enjoy being homeowners instead of white knuckling every single month. That's what I want for every borrower I work with. With Jonathan, we built 2 scenarios from the start. You need to know what to do in both cases, not just hope for the good one. Best case. Submit with the full extenuating circumstance package, letter of explanation, all supporting documentation, complete picture of where you are now. If underwriting accepts it, approval comes within weeks, and the closing date lines up with the end of the lease, clean transition, no gap. And then you got your conservative backup. If underwriter requires a full 12 months of clean payment history from the most recent late, we shift slightly, extend the lease 1 month. Wait until clearly past the 12-month mark. Submit then. Near guaranteed approval. No risk of forcing a denial by rushing the timing. Knowing both scenarios up front means that there's no panic, no scrambling, just execution, no matter which way underwriting goes. So a lot of people ask, what should I do if I'm in the middle of it and I'm currently late on something? Set every single account on auto pay. 1 new late payment restarts the clock. Keep paying down balances. Utilization affects your score and how your file reads. Build savings every month. Or pay off debt. Reserves are what separate homeowners who enjoy their house from homeowners who dread every expected expense. Reserves are what separate homeowners who enjoy their house from homeowners who dread every unexpected expense. Don't open new credit without talking to your loan officer first. And if your spouse or partner can pick up full-time employment with guaranteed income, that income can materially improve your debt-to-income ratio and your likelihood of getting approved. If you're not ready today, that is not failure. That is the plan working. The veterans who follow the process, who build the reserves, clean the accounts, document the story, get all their accounts on auto pay, those are the ones who close and stay in their homes. So here's a recap of what we covered today. There is no minimum credit score for a VA loan. The VA Pamphlet 26-7, Chapter 4, page 36 tells us that. Anyone who tells you otherwise is describing their own overlay or their own rules, not a VA requirement. What matters is your last 12 months of payment history. Clean history for 12 months and we can get a deal done regardless of your score. One lender saying no is not a VA denial. Know the difference. A letter of explanation is a case file, not an apology. Tell the story, attach the proof. Don't close without reserves. 2 to 3 months of your mortgage payment minimum. 2 scenarios. We have a best case and a conservative backup. Know what you can do in both situations and plan accordingly. Auto pay, pay down balances, build savings. Don't open new credit without your loan officer's input. And if your spouse can pick up full-time work or you can pick up another job with guaranteed income full-time, that strengthens your file. Jonathan went from a FICO below 500 to an approved VA loan in less than a year without his score ever crossing 620. The score didn't matter. The 12 clean months did.